Welcome back to Reimagine 2020. I'm Yonah Hochhauser, and today I'm glad to be joined by Alex Witt, Head of Finance at Celo. Alex, thanks for joining us.
It's a pleasure to be here.
Alex, first, you want to give our audience a little background on who you are and how you got into blockchain technologies?
Sure. So I started my career in the traditional financial world at Goldman Sachs, and I got a front row seat into kind of how capital markets work, how our overall financial system works, and I came away disheartened. So after 2 years, I kind of have ventured since then into democratization of finance, financial inclusiveness, and blockchain and crypto is really an extension of that. It's really a new tool that it helps us amplify the impact we're trying to make in terms of financial inclusiveness, and it's now going by all sorts of new names like DeFi, but it's really an extension of that financial inclusiveness.
Well, do you think that finally DeFi is a cool enough name to actually pull it off? I mean, people have been trying to, banking the unbanked sound less sexy than DeFi. DeFi, I think, is a pretty good buzzword right now.
The PR and marketing is critical. It is so critical. You're right, though. I mean, like, if you look at Tesla, electric vehicles were around for a long time, but they weren't cool. And then now you have Tesla, they're cool. And so, everybody's onto electric vehicles now. So, I think your point is very valid. I think the PR and marketing, the hype is actually really a huge and critical part of adoption, whether people like to admit it or not. So I think and I hope that DeFi is now cool enough to make this adoption become more widespread.
Well, you heard it here first. Alex Witt says that Celo is the Tesla of the blockchain sphere. Now, building upon that idea, Celo's slogan is "Money can be beautiful." What does that mean?
Yeah, I mean, it's really about reimagining the money. And we don't think of money as a technology, but it actually is a technology. And part of the reason for that is we haven't seen that much change in and around money for a very long time. And so the question becomes is, can we reimagine what money can look like? And the way that the financial system works was effective in sort of the industrial era and in the industrial age, but the financial system and the real economy tend to grow and develop together, and right now they're a little bit out of sync. So in the industrial age, for example, GDP was a good metric of progress, so to speak, right? How much you're producing, the more you're producing, the better. But now GDP isn't really a great proxy for human progress, right? If your healthcare doubles, your GDP just went up, but is that great for everybody? If your tuition for everybody goes up to $50,000 a year, which it is the case in many US universities, people can't afford it, but that increases your GDP. Is that a good thing? So I think we need to reimagine kind of what money looks like in the digital world. And money doesn't have to be this evil thing. It can be, in fact, a beautiful thing.
Mm-hmm. And what is it about this blockchain technology that only a very, very small percentage of the world, very tech background, how is that the technology that's going to break these barriers, that's going to topple down one of the strongest institutions that we have, the traditional financial markets? How is blockchain gonna go up against this giant?
Yeah, so it is a big battle, but I'm very confident that we are blockchain and the talented people, not just the people at Celo and in the Celo ecosystem, but more broadly, the talent that has been attracted to this area is, I think, well positioned to tackle the problem at hand. And to give one example, I mean, it is with traditional wires, it's faster to get on a plane to London and hand somebody cash than it is to do a wire transfer to London, which is crazy, right? I mean, we live in a world where you send a message instantly and free. But when you want to get money to London, it's actually faster to take a plane there, which is, that's just insane for the existing sort of legacy infrastructure payment rails. And so there's no reason why sending money, as one example, shouldn't be as easy, fast, and cheap as sending an email. And blockchain, for the first time, really gives us this toolkit, as I would put it, to achieve almost everything we see in the offline financial world online. And in effect, anyone with a mobile phone, internet, in the future can have similar access to financial products that a middle class individual in the United States or Europe might expect to have. So I actually am very optimistic that the problem is so severe, and that there's so much talent and this new kind of tools available to us to solve the problem. And in the case of the Celo ecosystem, there are almost 2 billion people in the world who are either unbanked or underbanked, and almost two-thirds of those 2 billion have a mobile phone. And so you have a situation in which, with blockchain technology, we can create sort of new payment and financial infrastructure that anyone with a mobile phone can access. And so it really becomes a matter of, how do we take these basic building blocks and bridge the gap? And to your point, right, it's really a largely technical audience at the moment. But one of the things that the Celo ecosystem wants to accomplish is to be that bridge. And so, as one example of what the Celo protocol does quite differently, is it matches public key addresses to phone numbers. So you don't need to know, what your friend's public key address is. You just need to know their phone number. So it makes it infinitely easier. So if you think back to, for example, PayPal, one of the reasons they took off is because they linked payments to people's email addresses. So before then, it was like it was too complicated. Nobody wanted to deal with it. But they had this huge breakthrough when people could just email money effectively, and people already knew their friends' email addresses. So similarly, we're doing, you can send money to your friend just by knowing his phone number. And that's one way in which we're kind of lowering the barrier to entry and making it much easier for non-technical individuals to enjoy some of the potential benefits of blockchain technology.
I mean, to me, that's always been, one of the big barriers of entry for newcomers is, hey, every time you want to transact, you got to copy and paste this really complicated list of numbers and letters. And there have been people in the sphere who have been trying to tackle that problem, those unstoppable domains, and then trying to make human readable crypto addresses. Is that similar here? How are you guys technically working? Is it a smart contract built on the blockchain that automatically connects the people's phone numbers to the public keys? And how is that first generation made? Does the user have to input his phone number to combine them?
So there's effectively a mapping process that goes on. So basically it maps your public key to your phone number. And the way it works is, when you register, text messages are effectively sent to your phone, and then it's to validate that indeed you do own that phone and have access to it. So you register, and then there's basically a two-way communication with your phone in which messages are received. It's validated that you do indeed own this number, and then the mapping is effectively confirmed in what we call attestations. And then in the future, you just need to know the person's phone number, and then of course the protocol will know that the mapping is to a particular public key address.
Well, listen, already now when I travel somewhere else in the world and I have WhatsApp and I have to get a new SIM card, and then I can only validate it on my old SIM card and the numbers, is that going to be an even bigger headache where now I go travel to another country, put in a new SIM card, and now I don't even have access to my money?
No, I don't know. I mean, I think there there are backups as well. So let's say, for example, that you went to a new country, you have a new number, you do have backup codes. So if there's a few ways that we've kind of been able to address this pocket of issues. Number one is, let's say you lose your phone, you move to a different country, you want to start over again. You can use those keywords, those seed phrases to kind of restart. The other thing is, one very interesting feature is that you can actually send somebody money that doesn't already have an account, and it'll stay in escrow until they pick it up. So let's say you want to send money to your friend, and that friend doesn't have an account yet, but he'll receive a text message saying, hey, there's money for you to collect, you just need to pick it up now. And so we have kind of built-in features that at the protocol layer, and when I say we, the larger Celo ecosystem, that make it pretty easy to kind of account for all sorts of situations that just happen with life, right? You lose your phone, your friend doesn't have an account yet, and so I think those are a couple ways in which it addresses kind of the existing travel issues you mentioned.
Mm-hmm. Well, you brought up a really good point before where you mentioned how nowadays it's quicker to actually fly the money to London and hand it over than wire transfer. And that's really crazy and it drives me nuts. But I don't think the issue in the traditional financial system is that they can't send the zeros and ones fast enough. Clearly, that's not the bottleneck. It's not the technology that's the bottleneck. Why with blockchain, why would sending transfers internationally be quicker? I mean, if that's not the bottleneck in the traditional world, it's the KYC and the AML. What's unique about blockchain and about the Celo network that will actually allow these cross-border payments to be quick and cheap?
Yeah, so so basically, like the international wires are more or less still operating under the SWIFT network, and that was first established in the 1970s, I think 1973 maybe, but there hasn't been a tremendous amount of change to those fundamental payment rails since then. And so there is still a lot of hand-holding and manual processes for those international payments in particular. You're right. I mean, money is mostly digital already. So if in the US, in Europe, and Israel, and other countries, over 90% of money is actually already digital. So of the amount of currency in circulation, less than 10% of that is actually fiat or physical. And so oftentimes within countries, so in the US, there's Cash App, for example. In China, there's WeChat Pay. You can actually pretty much instantly send money. But whenever you have to have communication with another, like payment rails, there is a manual kind of hand-holding process. And that's where blockchain can really, potentially through cross-blockchain technologies, really have a global standard for transmitting value across borders. And so it's really about kind of bridging the gap between what is 1970s technology and what blockchain allows us to do now. And obviously the first blockchain as we know it now is Bitcoin. And Bitcoin is amazing for a number of purposes, but it is slow and it is expensive, and one confirmation is 10 minutes approximately. And if you want to have enough finality, you're going to want at least 6 confirmations or an hour. And I think in the world we live in, like we really want payments as fast as we can send an email, right? So, relative to, let's say, the Bitcoin blockchain, Celo's blockchain processes transactions every 5 seconds. So it's a much faster kind of turnaround, and based off user studies, that's what we found is kind of works for most use cases. And each time you send a transaction, it's a fraction of a cent. So it's much faster and much cheaper relative to the Bitcoin blockchain. for the purpose of, for example, payments. One thing I would mention, though, just in general, in terms of why is the Celo blockchain unique or different from from the Bitcoin blockchain? I mean, one of the biggest problems in adoption, other than usability, is price purchasing stability. The average person isn't ever going to use Bitcoin to buy a loaf of bread because today it might be 18,000, tomorrow it might be 5,000, and so it's not really, at least in the immediate term, until things are denominated in Bitcoin. It's not a great tool for payments in short-term store of value. So one of the great things about the Celo protocol is it enables you to create stable coins, decentralized stable coins on top of the Celo network, the first of which is cusd. And so not only can you send payments very fast with 5-second block times and very cheaply with sub-second transaction cost, but you can also send it in cusd or stablecoin, US dollar stablecoins effectively. And so you can get that price purchasing stability along with the benefits of speed and low transaction costs.
And is the cusd, is that a fiat backed? Is that crypto collateral backed?
Yeah, so it's a hybrid of seigniorage style and crypto collateral backed. So yeah, as you mentioned, there's high level. There's 3 types of stable coins. There's fiat backed, there's crypto collateralized, and then there's seigniorage. And so fiat backed, probably the most famous are like a USDT or USDC, and then crypto backed, you've got like Make or Die, and we are basically a hybrid. So we have with Make or Die, or with the sort of crypto backed, we do have a reserve, and at the moment is over collateralized. It's half Bitcoin, Ethereum, and other crypto assets, and half the Celo native asset. And so in that sense, it is crypto collateralized. It's also what we call a seigniorage style. So the demand is directly tied to the circulation of cusd. So, for example, if there's demand for additional cusd, one new cusd is minted or created, and then that value is used to buy assets for the reserve in the proportion of half Celo native asset, half Bitcoin, ETH, and other digital assets. And then when you need to withdraw that cusd, it'll draw upon that reserve collateral in order to allow you to redeem that cusd into fiat USD or another digital asset. And so it's really a hybrid model, but at a high level, the advantages of this include being transparent and being auditable at any point in time. And so one issue with, for example, USDT is they don't always provide audited financials, and there is at times less than 100% transparency in terms of whether it's 100% backed. And I think the lawyer has previously mentioned that they're less than 75% backed. So indeed, there is a single point of weakness there, and I think that was really why Bitcoin became one of the first most successful cryptocurrencies. It wasn't the first. It was one of the reasons is because it removed that sort of single point of failure. And so similarly, we took a programmatic approach to stable coins in order to kind of gain those benefits of not having a single point of failure and making sure it's transparent and auditable at every point in time.
Mm-hmm. Now you mentioned, that this is stable coins are crucial to DeFi now. As we were saying that buzzword to DeFi. I mean, it's integral to its function essentially. And you guys have this hybrid backed cusd. Do you see a big growth of DeFi applications happening on the Celo network and on the Celo blockchain? And is it already there? And do you see it growing to the point of Ethereum? And Ethereum is highly congested right now. So do you see Celo DeFi applications scaling?
Yeah, so we have over 100 projects now building on the Celo network, and we are a fork off of Ethereum for the specific purpose of DeFi basically, and so we're built around that group of use cases, and so we don't have the same kind of congestion issues. I mean, Ethereum I mean, firstly, it's a incredible blockchain and for smart contracts, but it is a highly general kind of blockchain, and it wasn't set up for specific purposes. Like when Ethereum first came out in 2015, 2016, DeFi wasn't even on the radar as something that Ethereum could or should be used for, and so has a great. I mean, Ethereum is an amazing general purpose smart contract language and platform, but it is not set up, especially before ETH 2.0, for DeFi use cases, especially at scale.
Mm-hmm. Well, I mean, you guys are forked off Ethereum. What is different about Celo? How does it get around the congestion issue?
Yeah, so there's a few big. I mean, there are many areas, but there are a few big areas I would emphasize. I mean, firstly, we are proof of stake. And so Ethereum is going towards proof of stake eventually with ETH 2.0. But that in and of itself, allows us to scale at a relatively higher. So we have a validator network. There's a cap of 100 validators that are elected and voted in. And in that sense, it's a little bit like DPoS, distributed proof of stake. And so you do have significant more scalability. And so the proof of stake is one way in which we are able to, the Celo ecosystem, the Celo protocol is able to process many more transactions. Mm-hmm. So that would be one huge area of improvement. The other thing I would emphasize again is just that the phone number mapping is hugely critical to kind of adoption and making sure that transfers go through easily. And one other item I would mention is we have super light nodes, and so you're able to, with a very low end phone, sync the blockchain. And so wow. You don't have to have, like with Bitcoin, you better have like hundreds of gigabytes of spare space on your computer if you want to run the full blockchain. With the light nodes, you can basically run the own blockchain with a feature phone, like a very simple feature phone. So you could be using a Nokia in Africa with a bad signal, and you could still be effectively interacting and transacting with the Celo blockchain. So you've basically massively lowered the barrier to entry. So you get more scalability with the proof of stake consensus that we utilize. You get more usability with the phone number mapping, and then you really reduce the hardware requirements for end users with the super light node syncing.
And these are really big promises, and I've heard Celo compared to be a stablecoin to rival Libra. I've heard Celo is WhatsApp for money. Which comparison do you think is more apt, and do you think they're true?
I mean, all great questions. So WhatsApp, I think the analogy from WhatsApp is good in the sense that of usability. Like we want to make it super easy. So WhatsApp is very easy for sending messages. You don't need to be technically sophisticated. You don't need to know what's going on beneath the surface. And so in that sense, I think it's a good comparison from a usability perspective. You're able to very easily send payments and interact with financial tools and sort of at the usability level, it should have kind of an equally good user experience to a WhatsApp for sending messages, for example. In terms of the Libra comparison, I think they're doing amazing work, and I think that they are focused on some of the end target markets, but we've taken a very, very different approach. And so in the case of Libra, obviously it's a consortium of members who I believe have all paid $10 million. So it's a relatively established group of people who are kind of controlling the network. We're completely open source, and we have taken like a community driven approach to basically having everybody embrace the technology and have it be completely kind of protocol driven and community governed, rather than governed by sort of a set few individuals who kind of join the Libra Alliance. And so, I think that, we want this space to succeed. And so I think the more people, the more competition, the better. But in terms of the comparison to Libra, we've taken a very different, more open source approach to governance and towards platform development.
Well, isn't there, or how do you respond to criticism of proof of stake, where if essentially right now you got a consortium of 50 different organizations who now just bought $10 million each of cusd, would they not essentially be in that same position as the Libra solution? Would they essentially be dictating governance and dictating who the validators are?
So you don't have to pay any money to join the Celo Alliance, and the Celo Alliance is different from the validators who validate transactions and effectively run the network. So regardless of whether you are an alliance member of the Celo Foundation, which doesn't require any money, or if you're a validator, you get votes through people voting their Celo for you, and in that sense it's a very democratic process. So basically you have everybody, one Celo equals one vote, and everybody can vote their Celo for validator groups, and those validator groups are effectively like parties in a democracy. So you can see what the different validator groups are doing, and vote for them based off of whether they're mission aligned or whether they're doing work that you think is valuable. And so if you as a validator are not contributing to the community and not doing a good job, or your security standards are too low, people will vote you out. And so in that sense, one, you don't need to have money up front, and two, it's a democratically elected group of validators that are running the network that have to maintain a high standard in order to remain elected.
Well, I mean, I was more talking about proof of stake, highlighting that point, because you're saying that one Celo is one vote, and that makes it democratic. But someone could buy more Celo. It's essentially the more money you have, the more money you're willing to put in, or more value you're willing to put in, is equal to the number of votes. So doesn't that then all of a sudden make it undemocratic? Like my original question, if I got my big company and 50 of my consortium friends to each buy $10 million worth of Celo, wouldn't we then essentially democratically be wielding our purchasing power? I mean, that's right now there really isn't. I'm not trying to pick on you. There really isn't a perfect consensus model yet, and there really isn't a perfect governance model. But for a company that is all about we want to decentralize and democratize the financial world, give access and make fair to the world. I mean, how do you guys overcome this initial or inherent drawback to a proof of stake consensus model?
Yeah, so this is something we've thought about a lot. I would firstly point out that your concerns are quite valid. As somebody, I've been a Bitcoin miner, and so one of the things I appreciate about proof of work is that it's not something where the rich get richer. You have to constantly upgrade your hardware. You have to constantly look for cheaper sources of power. And proof of stake tends to gravitate, unless properly managed, towards a rich get richer kind of scenario. And so it's something that needs to be vigilantly guarded against. So in the case of Celo, there are those same pressures to fight against, but we've taken a lot of measures, or the community has taken a lot of measures to make sure that that it is not just a system in which the wealthy get wealthier. And so the Celo Foundation has block rewards that go towards the validators, and also for on-chain community governance. So we publicly published the distribution of Celo native asset across different buckets of uses. And actually, for purchasers or people who spent money to acquire Celo, it's less than 20% of the total Celo in circulation, and the majority is related to community grants, is related to validator rewards, and so the distribution of Celo native asset is driven a lot more by the community contributions rather than kind of how much money you happen to have. And of course, at the very beginning, any company, any organization, any community needs funding, and so the purchasers or the backers did give will have some voting power because they purchased it. But I would say, unlike other networks, I think the Celo ecosystem has gone out of its way to make sure that rewards are spread slowly over time, and with a focus on distributing that voting power or that Celo native asset to the community in accordance with their contributions, and not just how much money they happen to have.
Mm-hmm. Now, and what I applaud you guys for your work, because really anyone developing right now in the blockchain technology, which is so young and so new and so immature, that you guys really are laying the groundwork to fix these inherent problems. I mean, these are issues that everyone's trying to solve, and I applaud you guys for the incredible work you guys are doing. In your minds, because you guys have this amazing goal, you want to bank the unbanked, you want to help really decentralize and democratize the financial tools and financial markets. Do you guys view yourselves as competing against other blockchain projects, or do you see you guys as competing against the current available tools offered by the banking world?
I mean, I think the truth is the current banking tools have failed a large majority of the population. And so I would say in the immediate term, we're very much a complement to the existing infrastructure. And I would also say that, existing blockchain tools do not fully address the needs that that we're trying to address. So let me break it down. With regards to kind of the existing financial infrastructure, as I said, there's still 2 billion people without a bank account or are very underbanked, and the problems there are actually more systematic than anything, right? So if you send a wire transfer, it's generally around $30, and then there's generally a foreign exchange fee on top of that. So if you're from a small country in Africa trying to participate in global commerce, and the average per capita daily income is $10, $30 is prohibitively expensive. You're effectively barred from international commerce. And so the existing financial infrastructure has failed, in my opinion, 2 billion people in the world who don't fit within the mold of the current financial infrastructure. And so I think in terms of like, is there a competition with the existing infrastructure? The existing infrastructure has just not met the demand of this massive group of people. So I don't think there's direct competition in that sense. And then with regards to existing blockchain technologies and organizations, I mean, there's a lot of amazing work that's going on at the moment, but I still think that there's two huge pain points that continue to not be solved. And we talked about them somewhat a little bit earlier, but they are one, usability, number two, purchasing price stability. So, usability, I mean, as you said, it's still really like, hard for the average person to like use the technology. It's not convenient. And most people who, interact with crypto are really just hodling Bitcoin or Ethereum. Like they're not actually using it. They're like, that's the extent of their actual kind of engagement. And so I think you really still lack that usability. And I think with the phone number mappings and our mobile first approach within the Celo ecosystem, I think there's a real chance that we will bridge that usability issue. And then on the price purchasing stability, I think it's the thing is, Bitcoin and Ethereum for many people in the developed world is still very much a speculative asset, right? It's, digital gold, or it's, digital oil. It's not really something that people are, using to buy bread or water with every day. And part of the reason for that is it's just volatile relative to their purchasing power. And the U.S. dollar, for better or for worse, is kind of the global reserve currency. It is the global stable coin, so to speak. And so, by making by having the first stable coin be tied to the U.S. dollar, you really are kind of solving for that stability issue, that sort of price purchasing stability issue. So I think the existing financial infrastructure hasn't resolved the pain points, and I think that there's an amazing amount of work that's going on in the ecosystem, but I don't think that any of the existing projects have thus far completely solved both the usability and price purchasing stability pain points.
Mm-hmm. Well, I mean, it's kind of there's kind of two ways of going about it. You could either, and what historically the blockchain community has been doing is, hey, let's try to make it as usable as possible by making it, familiar or easy to use to the user, and then to make it price stable, let's tie it to the traditional fiat money, peg it to the dollar, and hope that the technology is so superior to the traditional systems and cheaper and faster and everything and easy to use that people will then ditch the traditional system and now use this new blockchain. But you worked for Swift blockchain, and so you uniquely, out of everyone I spoke to in the past week, would know, maybe in the world, you would know, how close or how likely is it that instead of the change coming from the blockchain world, instead it's just a traditional, established, like you said, Swift system has been around since the 70s, that they just, on the back end, they just upgrade their technology, that instead of their old technology, it's now a private blockchain. The end user has no idea. They don't have to be sold on a new technology. They don't have to now download a wallet. They're still just banking with their traditional banks in the centralized power, but now they're getting quick and cheap transfers that the blockchain world promising, because now they're leveraging blockchain technology. So you saw it from the inside. How much of a willingness is the traditional players like Swift to adopt this technology, and two, how likely and how close are they to actually doing it?
Yeah, so I think the traditional players will adopt blockchain technology inevitably, and it's not a matter of if, it's a matter of when, because frankly speaking, we have now tools available that are cheaper, faster, and more efficient. And so in a capitalist world, you're going to want to find efficiencies wherever they are. And traditional financial organizations are no different, and they will succumb to competitive pressures. And we will see larger adoption of blockchain technology by financial firms, and I think that would be an amazing outcome. I do not view this as a zero-sum game at all. I think if traditional financial banks are using blockchain technology to make transfers, to make financial products and services more accessible, I think that would be an amazing outcome. That said, historically, larger companies have moved significantly slower, and they also have not necessarily satisfied all of the demands of people and haven't been as nimble. I mean, you could say, why wasn't PayPal created by Citigroup or Bank of America, or why is Cash App started by a tech company and not by Barclays in England? And I'm not picking on any particular bank, but just to say that there is an agility, nimbleness, and that goes along with a startup that is trying to implement a new technology and kind of building from the ground up. And so it's I think kind of having worked in large companies as well as startups, I think one of my biggest takeaways is that people underestimate the power of a nimble, fast startup with a new technology to rechange how the industry works. And part of the problem with larger organizations I've found is that they're very bureaucratic, the interests are very entrenched, and there's really a lack of incentive to, in effect, in the short term, cannibalize their products and services. And so, if you're, for example, making $30 on a transfer, why would you suddenly want to create this new technology that's free? You would lose your $30 per transfer, right? And so your entire business model is thereby not valid. And so what you end up seeing is that traditional incumbents want to kind of extend that business model as far as it'll go. And in the meantime, you have these agile, fast startups using, building an entirely alternative universe. And then you usually get to a tipping point where it's just a vastly superior value proposition. And then the larger companies tend to be somewhat flat-footed. And just as people use PayPal or they use Cash App, they said, this is a better value proposition. I'm just going to do it with this new company. So some of the story is, I think that the large companies, in theory, you're right, they have more resources, they should be able to do it. In practice, it's usually not the case, and they're usually very slow to implement good solutions.
Well, I mean, right now we've been drawing, we draw a hard line between the traditional financial, institutions and blockchain projects. But as time goes on, for example, I apologize if I butcher his name, but C-Labs recruited Jai Ramaswamy. He was head of enterprise risk management at Capital One. You yourself come from Goldman Sachs and Morgan Stanley. And we see this more and more that talent and more higher up people from the traditional financial institutions are coming over into crypto projects and blockchain projects. And so what does this do for crypto and blockchain? Because at the beginning, it was just tech people. At the beginning, it was just blockchain nerds and hardcore libertarians and people who are ideologically into it. What does this mean for crypto and blockchain when you're having these traditional financial, really talented traditional financial people come in? So what do they bring with them? And two, in your view, does it taint the purity of the project, if there is such a thing? But it seems like blockchain is a lot more ideological than most industry. So does it taint it that we're taking in outsiders or traders? Obviously not to that extreme.
They're all great questions. I think a lot of people that are attracted to this industry are not necessarily like super happy with the way things worked. And you know, I think I think a lot of people who come to the industry, you know, have good motivations to really, you know, make a positive change and to change the status quo for the better. I don't think I think you're right. Like the origins of crypto, where you know, some anarchists and you know, there's, you know, a colored past. But I think a lot of new technologies are exactly like that, right? Like, you know, when the internet first came out, like a lot of it was surrounded around, you know, criminal activity and drugs. And I think a lot of new technologies kind of start on the fringes and then over time move additionally mainstream. So I view, you know, sort of additional talent coming into the industry as kind of a natural progression in maturement of the industry. I think it says something positive about how mainstream the technology is becoming. You know, I think one issue that I think of some crypto people kind of, you know, have is the problem is like, if you don't go mainstream, your impact is going to be like permanently much lower, right? Like before larger institutions started taking notice, I mean, Bitcoin was still, you know, very much a very small user base, and so I think overall it's a good thing to have this new technology be applied to solve real problems, to help people. And so I see the, you know, talent from traditional financial institutions as a positive thing and reflective of a maturing technology and ecosystem that is getting ready for mainstream adoption. And I view that as, you know, a very positive thing, because at the end of the day, we're trying to apply new technologies to solve real problems, to help people.
Mm-hmm. And we have university students from all around the world watching this. So, you know, what would you say to those kids out there who are interested in blockchain technology?
I would say, like, just start learning, start digging in. I mean, for me, you know, I started mining Bitcoin in 2013, and I just, you know, just sort of like tried to figure out, scrap together so much, you know, any information I can get. And I think getting your hands dirty and just, you know, really just kind of hands, you know, you either run your own node, or kind of look at, you know, what are the BIPs, the Bitcoin improvement proposals, or, you know, read the white papers for new projects. I think you know, really kind of get your hands dirty, and instead of just reading kind of what are the headlines for Bitcoin's price on CoinMarketCap, I mean, CoinMarketCap's great, it's an amazing part of the ecosystem, but instead of kind of focusing on those headlines, really get your hands dirty and dig into what's going on behind the scenes, what makes this technology tick, um, and really start to kind of draw your own assessments of the technology and its potential.
Mm-hmm. I back you up there. I second that. Wonderful advice. There is so much to learn in this space. And before I let you go, you want to just let us know what's on the horizons for C Labs. What's next on the agenda?
I think at this point, our Mainnet launched a few months ago in April, May, and we are now really priming for, you know, expanding our market. And I think a couple of weeks ago, we reached 100 members in the Celo Alliance, and we are continuing to grow our footprint by partnering with organizations who can leverage the protocol and technology that the Celo ecosystem has built. So at this moment in time, it's really about growing the ecosystem, growing our the footprint, and honing the go-to-market strategy in places where we can have a positive impact.
Well, they're clearly in good hands with you involved. Alex, thank you so much for taking the time and helping explain to us a little bit about what's going on behind the scenes and behind the headlines. Alex Witt, thank you so much. And for all our viewers at home for Reimagine 2020, I'm Yonah Hochhauser. Thanks for watching.